In today's interest rate markets, I want to focus on the 10-year note. The 10-year note slightly higher on the day. We're seeing a little bit of a reversal here after we saw quite a bit of selling pressure at the end of last week. Now, yesterday we did see the bonds close, so this is the start after a 3-day weekend, and a little bit of a reprieve here, at least to start the week, with the 10-year slightly higher on the day, right around the 128.15 level. So again, we're seeing a period of a little bit of a consolidation period here, as we're kind of in a holding pattern going into what I believe will be a big driver tomorrow, which will be Chairman Powell's testimony. So we've had a lot of news items coming out in the last couple of days, and when you look at the price action in the last 3 days, we're seeing a 10-year really in a fairly tight range. So again, it'll probably shake loose here later this week when we get not only some testimony, but also the inflation numbers coming out later this week. And when you look at the range for the last 3 days, we're looking at a low of 128.03 half and a high of 128.22. So we're just sitting just slightly above the median or mean in that level right now. So again, a fairly tight range for 3 straight days. Looking at the Fed, I want to point that out. Certainly, we had a lot of Fed speak today from significant amount of officials. We also had a presidential speech today that had a little bit of an impact on the market. We did see it actually impact the equity markets, where they gave up some ground this afternoon, and with that, when we saw the bond market actually rally slightly. Also, though, tomorrow the testimony on Capitol Hill for Chairman Powell will be quite significant, I believe. So again, the market's going to be very focused on that, along with the CPI, PPI, and retail sales numbers later this week. Also, I want to point out that when you look at the yields currently, we're seeing a little bit of a moderation, but it's definitely yields at the high end of the range for the last several months. The 10-year right around the 1.91 level right now, so 1.91, holding above the the 1.9 level, at least for the time being. And we did see a high last week of 1.973. So again, we're continuing to see yields across all the different durations for the most part at the high end of the range. A bit of moderation the last couple of days between the 2s all the way out to the 30s, giving up a little bit of ground. We're seeing a little bit of strength in those futures, and we're seeing yields coming down slightly, but nothing too pronounced. And again, as we move through this week, there are plenty of data points coupled with Fed speak that will probably influence this market and break us out of this current range that the market's been in for the last 3 days.